Hey, my name is Tucker Krause, and welcome back to my channel. Today's video, got another news update for you guys, so there's no waste any time, and get right into it. Alright, jobs openings massively surged. July reported 11.2 million jobs openings, with expected being 10.375 million, so that is a 0.825 million beat, with June's report revised up by 0.34 million, roughly 2 jobs per unemployed person. And that was after we had a record-breaking monthly change to the downside last month, though that is no longer the case now that it has been revised up, though we can see job openings are still historically very high. And so essentially this means there's a ton of demand for labor, but people just aren't filling it. ISM Manufacturing remained strong. August ISM Manufacturing 52.8, expected was 51.9, new orders 51.3, expected 48, employment 54.2, expected 49.5. Prices paid 52.5, expected 55.3, and so essentially what this means is if it is above 50, that indicates growth, and below 50 indicates decline. And so this technically shows that in August, the manufacturing sector was still growing, primarily in the employment area. Though, something to note though, is we have been falling off quite significantly. We peaked out here at about 64, 63, somewhere in that range, and we've now declined to down in 52 in like less than a year, which is the largest drop-off since the Great Financial Crisis, exempt from COVID, since that obviously bounced back so quickly. And so that is definitely something to note, though overall it's not necessarily super bad yet because obviously it's still growing. That's good. Uranium spot price continued to rally, so, the rally in the stocks has fizzled out a little bit. We haven't quite come crashing down, obviously, or anything, but it's definitely slowed down, though we definitely saw uranium price continue to move up significantly throughout this week, and we saw it peak out at about a 53-54 bid-ask, though it declined by the end of the week, as this is from September 2nd to a 50-50 or 51-25 bid or ask. So that's, of course, higher than it was before this rally began, though it's definitely come off the highs a little bit. So we'll definitely have to watch, is this going to continue to drop back down, or is spot and other factors going to, in the short term, help continue to push this up, and this rally is going to continue, or maybe it's the big one. Who knows? Non-farm payrolls show a jump in unemployment, which we will get to in just a second, but first, U.S. August non-farm payrolls, 315K, expected was 300K, July 526K, so of course this is a little bit of a drop-off, though it still beat expectations. U.S. August average hourly earnings month over month, 0.3%, expected 0.4%, July 0.5%, U.S. August average hourly earnings year over year, 5.2%, expected 5.3%, July 5.2%, and so this shows that it is falling off compared to July, and these both came in below expectations, which is obviously not good when you factor in inflation, because of course that makes it more difficult for consumers to, handle inflation, and people to handle inflation if, inflation is going up higher than their earnings, which is, right, obviously not good. And June and July were revised downwards by 107K payrolls here as well. So overall, kind of a mixed bag. Though if we continue to look here, U.S. August unemployment rate jumped up to 3.7%, expected was 3.5%, and July was 3.5%. Unemployment rate, obviously, going up, not good. Though something you should know about the unemployment rate, the way they actually calculate it is, if you're someone not looking for the job, you're not actually included. So this doesn't include every single unemployed person in the U.S. This is just those actively seeking jobs. 3.7% of those seeking jobs, or who have jobs, don't have jobs. And so Peter Schiff tidies that up nicely here. Lots of people entered the labor force in August, which is why the unemployment rate jumped. But if there are really so many unfilled jobs available, why did these workers just take on some of those jobs? The newly unemployed either don't qualify or don't want those jobs. And so that's definitely something interesting he raises here, right? We saw earlier in the video that job openings are at about 2 for 1 per unemployed person. So realistically, it should be easy enough to bring that unemployment rate down, but there's obviously other factors that are preventing that from happening, though we don't know those exact factors really. Could it be they don't qualify, they don't want those jobs, like Peter Schiff potentially guesses at? Or could it be that a lot of these jobs aren't paying well enough to handle inflation? And why exactly is it that more people are entering the labor force, right? Is that because inflation is forcing people to come back into the labor force? There's a good chance that is the case. But we'll just have to see where this continues to go. Alright, Gazprom's Nordstrom pipeline fully stopped. From Doomberg here, Gazprom, during routine maintenance works, oil leakage was detected. Gas supplies to Nordstrom fully stopped. Interestingly, it's just so happened 5 hours before that, G7 finance ministers confirmed plans to implement price cap on Russian gas. Maybe this was intentional, maybe it wasn't. That's just an interesting point there. And so obviously this is not good for Europe. They're super reliant on Russian gas, and they've obviously not been doing too well with Nordstrom just slowly coming down in flows, let alone stopped. This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.